Aotearoa, and welcome to Tuesday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston, and this is the international edition from interest.co.nz, and today we lead with news that gold is rising, being the last man standing as a perceived safe haven asset. And American bond funds are having a moment, a negative one. Outflows are continuing, building selling pressure at the rate of about $10 billion per week, and have done so for the past 5 weeks now. The position of the US dollar and US Treasuries are being directly undermined by the US President. He and his advisors have been raging about the role of the Fed boss. If he tries to remove them, expect a larger market reaction, especially from the bond market. But so far it's all bluster from them. But first it'll be a short, truncated week post-Easter, with just 3 business days until Friday's ANZAC Day holiday. Our March export results are one of the few data releases. We'll also get an update this week from the RBNZ's 6-monthly credit conditions survey. Internationally, we'll get the start of the March flash PMIs for April. Wall Street will continue with its early earnings season's results, dominated this week by big tech. US durable goods orders for March and a confidence survey results for April are also due for release this week. Over the weekend, China left its key lending rates unchanged for a 6th consecutive month in April. After that, the yuan rose, as did the Hong Kong and Shanghai stock exchanges. Expectations for a reserve ratio cut to boost bank liquidity are mounting there. And China ramped up its budget spending in the first quarter at its fastest pace since 2022, allocating nearly 22% of planned outlays to counter weakening in foreign demand amid the ongoing tariff war. The move is part of a broader strategy to boost domestic demand and support industries hit by trade tensions. Earlier, they said foreign direct investment into the country is struggling again. In January, it was down 14% from a year ago to 13.4 billion yuan in the month. It rose to 16.6 billion in February, a 16% year-on-year gain. But in March, it was only 6.9 billion yuan, a 45% drop from the same month a year ago. China prefers to look at this data year to date, but that masks the current weaknesses. Japanese CPI inflation stayed high in March, although it did slip to 3.6% and the second consecutive decrease and the lowest of 2025. Across the Pacific, the US dollar has fallen to a 3-year low. Sentiment has been undermined by the Trump attacks on the US Fed, and it seems pretty clear that the US is now in a tariff tax recession. Not only is the Atlanta Fed's GDP now signaling a 2.2% economic contraction, the blue chip consensus forecasts are now showing up with contraction forecasts too. And the spread into investor funds is happening rather quickly now. 90 of the top 100 best performing exchange traded funds of last year are down in 2025 with the average loss of 13%. American new housing starts unexpectedly dropped 11% in March from February to an annualized rate of 1.324 million, the lowest level in 4 months and virtually the same as the same month a year ago. But the expectation is that these will fall from here as new builds get much more expensive from the tariff tax effect. US initial jobless claims came at 220,000 last week, an increase, although less than an increase than seasonal factors would have anticipated. But that puts them 5.1% higher than year-ago levels. Diving even more is the Philly Fed's factory survey in the Heartland, Pennsylvania manufacturing Rust Belt. This is the icon region the tariff taxes are supposed to save, but they aren't feeling any benefit, although hardly surprising to everyone but MAGA zealots. New orders dropped to pandemic levels, and apart from the pandemic, the overall sentiment has seen its fastest and steepest drop since these survey records started in the 1970s. In Canada, they're about a week away from their federal election on Monday the 28th Canadian time. Polls are tightening, but the incumbent Liberal Party still holds a considerable lead over the Conservatives. Likewise in Australia, their federal election is in the week after that. Polls there also show a comfortable lead for the incumbent Labor Party. In both cases, the Conservative forces are undermined by the toxic Trump effect. But on the other side, the Australian Labor Party is wavering in some key Heartland Sydney seats, hurt by the Gaza issue. In Europe, they're in a better position to cut interest rates because they don't have the inflation pressures the US has. And they have. The European Central Bank has cut its policy interest rate by 25 basis points on Thursday as expected, marking the sixth consecutive cut since June and bringing the key deposit rate down to 2.25%. They say their disinflation process is progressing well, and they've now dropped previous references to a restrictive policy stance. They also say that their growth outlook has worsened from the escalating trade tensions. On Thursday, Australia released its March labour market data, and there was a good 33,000 rise in new jobs, bouncing back from the February drop. The March data saw the increase evenly split between an increase in full-time jobs and part-time jobs. Their jobless rate was unchanged at 4.2%. There are now 308,000 more people employed in Australia over the past year, a rise of 2.2%. The US Treasury 10-year yield is now at 4.40%, up 7 basis points from this time on Saturday. And Wall Street is taking it on the chin in its Monday session, down a very sharpish 3.1% on the S&P 500 and staying down. The NASDAQ is down 3.6%, the Dow's down 3.3%, so a broad retreat. And the price of gold will start today at $3,417 an ounce, and up $90 from Saturday. Oil prices have fallen in US dollars, down $1.50 from Saturday to now just over $63 a barrel in the US, while international Brent price is now just on $66 a barrel. And the Kiwi dollar is now at 60 US cents, up 60 basis points from Saturday at this time, and its highest in 6 months. Against the Aussie, we're up 50 basis points at 93.6 Australian cents. Against the euro, we're unchanged at just on 52.1 euro cents. That all means our trade-weighted index starts today at just under 68, and its highest since mid-December. And the Bitcoin price starts today at $86,811 and up 2.6% from Saturday. Volatility over the past 24 hours has been moderate at plus or minus 2.2%. You can find links to the articles mentioned today in our show notes, and you can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.